start off with the NEC 20. We've had lackluster days for the past couple of days. NEC 20, though, has had a good run of late. Do you think it's sustainable?
Yes, it is sustainable because looking at what is happening all around, there's a one feel-good factor. There's two, there's actually signs of growth and very much in terms of key sectors of the economy. You notice that tourism has been very vibrant. If you look at the tea prices, which actually has gone towards sustaining the Kenya shilling, if you notice there's a lot of inflow of dollars. When you look at the construction industry, again, it's the same. It's the second most growing industry next to the tourism industry. So there's a lot of positive aspects in terms of future growth in the country. And as I said before, there's a feel-good factor.
Well, Waiyaki, I mean, you mentioned the tourism industry, that doing relatively well, and it's also quite surprising that the construction industry grew by around 11%, and this also prompting a lot of investors to look at investment opportunities within the sector.
Yes. So I think it also has to go with the whole issue of an enabling environment. There's a lot of demand, especially for domestic houses vis-a-vis commercial properties. But again, the balance, if you notice, there's been a lot of demand, especially by foreigners with the property market. There's a very big boom in the property market. Property prices have actually skyrocketed. If you look at the value of land, has actually more than tripled or quadrupled over a given period of less than 5 years. So there is demand on the ground. And this demand, again, if you look at it from a point of view of the cement manufacturers, the savings and loan through KCB, the housing finance, I mean, it's a big business for everyone when you look at it in the bigger picture.
Yeah. What about Athi River Mining as well? Just looking at this company and how it could also benefit from the boom in the construction sector.
Yes. If you look at it in terms of their strategy and the way they've placed themselves, they have two distinct terms. You notice there's a side where they deal with the fertilizer, that's one end, and then there's a whole, now the cement manufacturer. Over the years, if you look at Bamburi, you look at Athi River Mining, you look at East African Portland, despite the losses which are one-off because of owing to the currency exchange, the yen being stronger, that credit facility or a loan they had has actually eaten into their earnings. But when you look at the long-term effect, and then you factor in that now the East African economy is actually much wider. With the incorporation of Rwanda, you have Tanzania on board, you have Uganda. There's way much more demand than the three can actually be able to sustain. And that, in the long run, will actually be a boon for all.
Athi River Mining sitting at 173 shillings. It's gone up around 23% over the last 3 months. Would you be accumulating this stock on the premise that we'll see more flows into the construction industry?
Yes, there is. Actually, that's one of the key indicators. And I'm sure when you look at it from the point of view of a lot of foreign investors, they're actually more or less savvy and looking at the point of view of they can anticipate. They look at the demand on the ground. They look at the fundamentals. You notice that the Athi River Mining, in terms of its management over the years, has actually proven to be quite a force to reckon with, challenging the likes of Bamburi, which, as you know, is a almost majority owned by Lafarge. You look at East African Portland Cement with actually a majority stakeholder being the government. But Athi River Mining has been able to actually challenge them in terms of the market share and has been growing over time. So it's also a profitable share to invest in, and also looking at the fundamentals, one of the key reasons that as an investor you would be looking at investing in that kind.
It seems that Kenya Power and Lighting Company has been the talk of the town. Yesterday we saw it gaining 2.1%. Today we're seeing it down 2.9%. So reversing the positivity that we saw in yesterday's session. And this really following the announcement by the firm that it will be completing that restructuring of its balance sheets through a conversion of preference shares and a cash call later this year. Do you think it's going to be positive for the company? Because the initial announcement prompted some buying into the company. It seems that some investors are now booking profits.
Yes, you notice that there's as well as you understand in terms of investors, if there are those who are in it for short-term profit, but there are those who are looking at it from a long-term prospect. Because like we mentioned earlier, you notice that there's that rural electrification project that has actually been undertaken and which will increase in terms of electricity connections within the country. And Kenya Power is actually strategically placed to try and be able to meet that demand. But also going forward, you notice that the idea of actually now having that split of the preferential shares, being able to have more shares and liquidity, will also allow them to be able to have much more shares trading and also allow for flexibility and to rope in more investors, because also at the share price, you notice, is slightly prohibitive. Not every person can partake in it, but going forward, you notice that it will also be a viable company. And being the sole, in terms of power company within Kenya, you notice that it's in a prime position to actually attract much more investors as being a utility company, so to speak.
Well, Yaki, we were talking a little earlier off air, and you were saying that, Cooperative Bank, one of those stocks, have done really well. Do you think that it's still offering value? Is it a good time to head into the share, or do you think that it's pretty much had its good run?
It's been headed for a good run, owing to one of the key things, the strength of the cooperative movement. That has been its bulwark, but also going by its ability to diversify. Now they have their own stock brokerage firm, Kingdom Securities, then looking at their balance sheet, noticing in terms of their expansion, and then looking back, you notice that a lot of the strength has come from agricultural-based savings and credit. SACCOs, you notice that agricultural-based SACCOs have actually helped be the bulwark for Cooperative Bank, but also management structure. Steps have been put in place in terms of realizing that going forward, you have the competition of what you call the major blue chip banks. You have Standard Chartered, you have Barclays Bank, you have Equity, each with its specific model. Cooperative Bank comes on the table also with its own model in terms of its large cooperative movement, which has been its strength over the years. But also going by that, there's a whole idea of proper management. And like I always say, management will always entice investors. They look at how decisions are being made and the way forward. So yes, has been a strong rally for it, yes.